What's going on, everybody? Mando Trading here, and in this video I'm going to talk about the idea of preparation and how one could prepare for the upcoming week. If you haven't already, please subscribe to my channel, like the video, drop a comment below if this is something that you see working for you or something that you could see yourself utilizing. So let's get into it. So first and foremost, to me, if I'm looking at it from a weekly perspective, where should I start, right? To me, starting on the weekly time frame is automatic. And the reason why I look at the weekly time frame is because, to me, the weekly offers the most amount of information that we could possibly have. Now, you might say, well, there are time frames higher, right? There is a monthly chart. I totally get that, and I agree with you. There's a yearly time frame. Again, I totally agree with you, and I get that. The reason why I use the weekly is because while I still think it is a massive amount of information, I also believe that our move will likely happen a little bit quicker than what a monthly chart would look like or what a yearly chart would look like, right? So to me, the reason why I would use a higher time frame chart such as the weekly to start off is for me to at least do my best to try and identify if there is a clear draw on liquidity in a specific name. Now, you're going to see over here on my side, I don't know, I probably have 100 names over here, right? So what I do, and it really doesn't take all that long, is I just go through, and if I can see a setup that identifies to me what would be a higher time frame draw on liquidity that is actionable, from that point I then look to see if it will check out on, say, a daily time frame, or say even tighter than that, an hourly time frame. But if the highest time frame, and for me again, is the weekly time frame, if that doesn't make sense and I don't have a clear idea of what the draw on liquidity is, aka NASDAQ, where we currently sit, I don't have information to my left anymore. We're at all-time highs, right? Or we're above all-time highs previously. So I need to find something that to me offers a clear draw on liquidity, whether it's up, whether it's down, it doesn't matter. And that way I can then crunch it down to a daily. Does it check out on the daily? If it checks out on the daily, great. Let's go down to the hourly time frame. Does it check out on the hourly time frame? And it might not be perfect at that minute, but the way that you can operate here is to actually just set alerts on your chart so that when price does come into, for me, it would be a discount of a specific range when I know that the hourly or the weekly draw on liquidity is higher. Then to me, that would be my setup. And I can just wait, and I can set alerts for 100 of these if there's 100 viable setups. But the thing here is, and the thing that I think a lot of people don't really know where to get started, to me, is just make a list of a bunch of tickers. Whether you've traded them before, whether you haven't. If you have done your work in the past to feel comfortable with a specific setup that you might like, why not have a bunch of names? And when something actually comes along and triggers or clicks that, oh wow, okay, I'm throwing a random name out here, wow, Carvana, that really is meeting the criteria for my setup here. I may not have traded it before, but if this is my setup, this is my setup. People always used to bring this up, and I'm glad that it's kind of gone now and nobody talks about it on Twitter anymore, but they would say how tickers have personalities and things like this. And look, at the end of the day, you can look at 100 of these charts. If you just cover the name, they tend to operate the same. Personality wise, I think that kind of pertains a little bit more to like penny stocks and stuff that I'm not interested in. But or maybe just the way the premiums move. I'll give you that. If you say, oh, there's a personality to it, and it's specifically based on how their premiums move, or maybe if their options contracts are in 2.5 intervals or something like that, so that I'll give it to you. But the way price moves, it doesn't change based on what ticker you're looking at. So I don't know. Sorry to break that to you if anybody firmly believes that. But if you have a counter argument, please drop it below. I would love to hear it. But anyways, going back to what we were talking about here and how we can just overall scan through names and just put together a little list. And again, they don't have to be Monday morning, this is perfectly in discount, I'm jumping right in. It doesn't have to be that way. But if you see where there could be a potential discount retracement, why not set an alert for that? And when you have an alert set, whether it's a ping on your phone, whether it's an email, whatever it can be, TradingView does a really nice job with their alerts. You can place it, and not only does it pop up in the bottom corner, but also it'll email you if you want it to, or I think they even have the text option. So that's really what I'm doing with a lot of these options trades that I'm looking at. And just knowing that if I know what my weekly draw is and it checks out on the daily, meaning the daily I don't see anything that's very disruptive, or maybe we are just retracing down into discount on the daily, which is great, right? It gives us a better opportunity to actually get in and trade this thing. But then I go to the hourly time frame, and from the hourly time frame, it's great because now we're looking at a specific price run that's within overall a blank setup, whether it's bullish or bearish, right? So we have that hourly setup within a daily setup within a weekly setup, and typically I want those three to line up, and if they don't line up, then I go to the next name, right? So I know I randomly used we'll go to that one next, but I just want to show you a couple examples of this because, again, I think people just see, oh, there's so many stocks that I can look at. To me, again, making a list has been extremely helpful. There's a lot of names on here I probably haven't even touched, but just having them there and being able to scan through and see, do any of these actually make sense? Do they line up with my model? Do they line up with the way that I like to trade? If they do, great. If they don't, on to the next. There's so many that we can look from. So anyways, yeah, so let's move on, and we'll look. So again, to me, something like Tesla, this meets my bullish requirement, right? On the weekly time frame, we've retraced into discount of a bullish range, right? Awesome. So now, what is the draw on liquidity here on the weekly? It's pretty far away, and when we get a situation like this where you have a very, very high potential draw on liquidity, which we have multiple actually that are much higher, how can we operate in the short term? Because we all kind of know that price doesn't move like 40 points, or on like Tesla, it won't move $40 in like one day, right? Or even a week, for the most part. So how can we trade that while still having our higher time frame draw in our back pocket, feel good about the direction, and now we just have to work on our execution? So if that's the case on the weekly, I usually just look towards previous highs and lows on specific daily candles. I should add this as well. This is a bearish imbalance right there. But when you crunch down in time, whether that's daily or whether that's hourly, you're going to notice that there are a lot more of these little hourly highs that might not show up on your weekly time frame, right? There could be multiple sets of highs and lows within this daily candle, for example, that we could be using as a potential target for a smaller time frame or shorter dated type trade. So for Tesla, so if I'm feeling pretty good about upside here on Tesla, let's see how it checks out on what would be our daily time frame. Oh, whoops, it would help if I spelled it right. So here's Tesla, and let me just zoom on in. And something that you might not see on the weekly here on Tesla that is clear as day on the daily time frame is this bullish breaker on the daily. So you have your low, high, lower low, and on a break above the high of that sequence, you create what would be a bullish breaker. So by creating that bullish breaker, we can now view that level as somewhat of a support level moving forward, right? And again, this is something that you can backtest and look. Just for clarity, if I were to show you something like this, and I know this off the top of my head because this was helpful in the moment, but here's your bullish breaker on Roblox: low, high, lower low, break above that breaker. You'll see we broke it here, retrace back to the bottom of it, bounce back multiple times off the breaker, and it took off, right? So I'm just using I guess previous situations as a way to kind of back my current thesis. So now we know we have the breaker below us. We're currently sitting inside a bearish imbalance, but if our draw on liquidity is higher, we don't really view this as much more than a roadblock, or maybe a short-term rejector ultimately to get us back down into a bullish inefficiency and look higher from there. So if this is still checking out, we know we have this bullish breaker down here, starts at 196. Now we can come on over and say, okay, well, this imbalance fills at 207.83. We also have multiple little daily highs working our way up in this area here up towards 217. Let's see what we can find on the hourly and see if it makes sense, and see if we can at least leave an alert for us as we kind of proceed here. So now we come on over here and we'll take a look at Tesla's hourly chart and see that here's our breaker, remains the same. There was our break up and through, and you'll notice that on this hourly time frame specifically, we ran into the midpoint or 50% of this bearish imbalance and started to reject. Now with that, we know, okay, well, we definitely took out the breaker high in this situation, right? So if we took out that breaker high, what was the price run to do it? And we can zoom on in and say, well, this low to that high is our new bullish range because it took out numerous sets of highs in that particular sequence. Great. So with that, we know, okay, where in discount do we have an imbalance that we can look towards to see if it would make sense, right? So I'm looking through and I see we do have multiple imbalances down here in discount, but what would make the most sense to me in this situation, what would be the best risk reward, what would be the cleanest, if you want to call it that, for the next leg higher, right? And to me, looking at this, I know we have this breaker. The breaker's on the daily. We see it clearly. We see it here on the hourly. It's also in discount of this range. Also lines up very nicely with this bullish imbalance here on the hourly. So we have multiple different bullish setups or PD arrays that are working in confluence with our overall idea here that Tesla's in a bullish a bullish weekly trend, it's in a bullish daily trend, and it's in a bullish hourly trend, right? So, while look, I don't really want to buy it up here, I'm just going to set an alert. If we can come on down to the breaker in discount of our bullish range, to me, that not only limits what my potential downside risk would be in that situation, but it also gives me a good idea of, okay, if we were to lose this and I lose the trade, I know things might be shaken up here. But I think to me, this would give me the best opportunity to get in with a very solid entry, so I'm not going to get shaken out, right? If I were to buy at 199, but we know that price likes to go down to discount, 197, that's $2 off your contract already. That can hurt if you're trading a shorter time frame contract, right? So that's why I like for it to retrace down into discount, and we were able to identify a pretty fat area in terms of levels of support or bounce levels that we would expect. And from that point, where would our target be? Previous highs. That would complete my model, and then we can look on over here. Look, what was our next draw on liquidity at that point? 212.79. Great. Then from that point, who knows? Maybe even take out that 205, retrace again, and then play it again. But when we have a good idea of where price wants to go on the higher time frame, to me, that takes a lot of the guesswork out of that smaller time frame trade or the smaller time frame idea, and ultimately we have to just focus on our execution at that point, especially if we feel good about it going higher. And ultimately, are you going to be correct every single time this happens? No, but it's just a perfect way to, let's say you work and you're not able to watch this all day long. Why not take an hour out of your time, on a Sunday as a way to prepare for the week and have 5, 6, maybe 7 alerts set, so that when the time does come, you take a lot of that work out of the equation. But again, that's just one example of it, and you can continuously move on. Here's Boeing. Here's another one where ultimately I think it goes higher, but does it make sense at this current moment? Let's see over here on the daily. Well, daily is holding this. Okay, good. Bullish volume imbalance or gap higher, and this is multiple times here. And ultimately, or the expectation in this situation, what would our drawn liquidity be here? And it would be that 213.77, 214.63. Those are relative equal highs, and then above that you have 217.59, which is also relatively equal with no imbalances in between here on the daily time frame. So one thing that I would consider here is just knowing here's a bearish volume imbalance on the daily, and did we take out this low to turtle soup? No, so we're still holding up on that low. Let's check out the hourly and see if the hourly makes sense. And again, this happens quite often, and there are a lot of situations where it might not make sense to trade it. So if that's the case, then on to the next. We have a huge list of a ton of names that we can go through and continuously do our best to find the best setup here. But again, here's Boeing on a longer, I guess you could say, type of market structure or trend, and you'll notice it's still bullish, right? Price is still in discount here. Does it need to come lower in discount? That would be the question, right? And we did ultimately get down into that bullish imbalance right there, and that's in discount as well. I do have a fatter level here, but this is either a 4-hour or a daily level that I just translated onto my hourly chart. But from this point, it doesn't look all that bad. You do have multiple levels of little levels of resistance above, but ultimately in that situation, again, if we're bullish, then we would expect those to act as nothing more than speed bumps. But if there's setups with less speed bumps, then maybe it's a better idea to look for something else. So you can almost have, let's say you come to the conclusion after looking at 85 names, you come to 7, and then you can kind of use those 7 as a way to say, hey, you know what, this one has multiple levels of resistance above. You know what, I'm going to look elsewhere. I think this is a better setup than Boeing. Then I'm not going to play Boeing, right? But it's just, to me, a great way to kind of set up and take a lot of the work out of it that you're already dealing with when the market is moving. But by having it already set and ready for you, you can make a lot of your decisions heading into the week prior to the week even opening up. So so that's just a short video on how the higher time frame, to me, is the best way to even consider these smaller time frame trades. For example, let's say we had something that was looked pretty gross on the weekly. We wouldn't even pass step 1 for us to look at it from a daily or a weekly or a hourly time frame, right? So it's almost like a little checklist. Does it check out on the weekly? Great. Does it check out on the daily? Great. Does it check out on the hourly? Great. Perfect. Now we can even see if you're trying to look to scalp something, or maybe even look at a really short dated contract, which I try to avoid. But if you were even to look at that, you could try and find a even smaller time frame imbalance to really be as precise as possible with your entry in that situation. So but that's all for this video. I hope it's helpful. If you have any questions about it, feel free to drop a comment below. And again, if you're not subscribed already, please do, and like the video as well. That's great. And if you're interested in joining my group, check out the link in the bio, and I think the description of this video as well should have it. And we'll talk soon.